How do you know your customer? If you don't know your customer, it has never been more important for organizations to establish accurate, secure, and efficient identification process before engaging in any business relationship. Refinitiv Qual-ID is a unique digital identity solution that delivers a powerful combination of ID verification, document proofing, anti-impersonation checks, and risk screening. Delivered via one API. With Refinitiv Qual-ID, you can improve customer experience, deliver more efficient and secure onboarding, lower costs, and enhance compliance in a seamless digital experience. Backed by leading-edge technology, trusted data, and irreplaceable human expertise, our solutions deliver immediate benefits and help our clients to protect against financial crime.
Welcome, everyone. Good afternoon, and thank you for attending this second installment of our Risk Revealed webinar series, Future State of Digital Banking, Implications for Financial Crime Threat Post-COVID-19. My name is Karin Rines, and I'm the Marketing Manager for the Risk Business at Refinitiv. Before we begin, I'd like to cover a few housekeeping items. Just a few technical to note. Plug in your headphones to listen to our. Click on the media player on your console screen to enable the sound and ensure that Flash is enabled on your browser for best viewing. And if your screen freezes up, just please simply refresh your browser. Usually that will clear it. If you have any other technical difficulties during the webcast, please click on the Help widget, which is on the toolbar at the bottom of your screen. It's a question mark icon, and it will cover common technical issues. You can expand your slide window or the video windows by clicking on the Maximize icon at the top right of the window, or by dragging the bottom right corner of the slide area to expand it. And at the top right corner of your audience console is a Q&A box. Please submit any questions you have in this box, and our presenters will answer as many questions as they can get to during the last 5 to 10 minutes of the webcast. This webinar is eligible for 1 CAMS credit, and in order to receive that credit, you must attend the entire 60-minute presentation to qualify. Attendance certificates will be emailed at a later date following the webcast. The link to the recorded webinar, a copy of the slide deck, and other resources will also be mailed to you after the conclusion of the event. And you can access the webcast on demand using the same link that you used today. Now, moving on, I'd like to go ahead and introduce you to our speakers. Our moderator is Holly Seiss-Filippi, Chief Director of Risk Market Development at Refinitiv. Joining Holly on the panel are Jeremy Kuster, Counsel at White & Case, LLP, Ben Arbour, Head of Financial Crime Compliance, Commercial Banking at HSBC, Jeremy Foster, Acting Director, Office of Strategic Policy at FinCEN, and James Merton, Global Head of Digital Identity and Financial Crime Propositions at Refinitiv. Without further ado, I'll turn it over to Holly to get us started. Holly?
Great, thank you, Karin. Thank you, everyone, for joining us today. We're really excited to see everybody here. You get to see us, we don't get to see you, but thank you for joining. As Karin mentioned, please take time to ask questions in the Q&A panel. We certainly have a packed agenda today, but we will absolutely look for time to make sure that we address some of the Q&A, because I think this is a hot topic near and dear to many of our hearts. So we're going to just jump right in. Certainly, I'm excited about this topic just because it's been kind of a trend for some time now, but it's certainly with COVID-19, I think raises the profile a little bit. So it's no question, right? The world is exploding with digital connectivity from people, organizations, businesses, et cetera, right? We all have enabled devices, internet-enabled devices, so we're keenly connected, creating, a really fast-paced environment. This certainly has an impact from a global financial and payment systems as well. So they're looking to keep up certainly with the demand, but also there's some rapidly growing, risks and threats that they're facing because of the technology developments, from cybercrime and fraud that we're starting to see. Certainly that's, like I said, that's been a trend, but now with the outbreak of COVID-19, it certainly presents an alarming health crisis, no doubt, that we're all grappling with. But in addition to that, there's, certainly significant commercial and banking impacts being felt globally as well. And I think we're starting to see the rise of some of that, some of that fraud that's happening. But by no means do I think that we've seen it all. I think that's been an ongoing sentiment. Now, that sounds a little doom and gloom. So there's certainly some threats that are out there, but I also think that this has brought some opportunity for us as well, in a positive manner as well. So we're going to dig into those topics a little bit as we go through the discussion today. And we certainly have an amazing panel of experts. So I'm really excited that we're going to get to hear from them. Certainly, given the move to digital, right, it's been a hot topic, like I mentioned, pre and post. I guess, mid-COVID, not necessarily post, that we've seen. And we've also seen many large, financial institutions start to adopt digital strategy officers, acquiring digital assets, developing digital strategies so that they can make sure that they're keeping up with pace and, prepared to move to this digital environment that we're in. We recently saw a study out of the UK that showed, the adoption of digital has had a 165% increase just in banking over the last 12 months. So it's not just banking, right? It's also everything else that we have at our fingertips. So, certainly with, COVID, it's now forced us to go digital, right? We weren't able to go out and get dinner. We were having to, order things online. We were having to order our groceries online. I have a shopping habit. I was shopping online. So you're not able to go out and do those things, which, means it's not just a trend, it's now a necessity. So we're going to take a look at what that means, certainly, as we start to accelerate that digital experience. So Ben, I'd like to start with you. Given your role at HSBC, what challenges have you seen and experienced with the pace at which we're starting to move digital and have been moving digital from a banking and investments perspective?
Yeah, thanks, Holly. Firstly, I agree with you in terms of the digital transformation and the pace of change. If we think of the transformation over the last 2 decades, even at 1999, 2000, interacting with your bank on the internet was still a very novel concept. And obviously, e-payments, mobile banking were almost unheard of. And I do feel that now the pace of innovation is unprecedented. The contribution by fintechs is incredible. And certainly the unfortunate conditions under the pandemic have meant that banks have had to adapt quickly, whether it comes to the inability to sign documents or conduct site visits or other routine parts of banking processes which have needed to become digital very quickly. So I think the biggest challenge is one of fraud. If we look at internet banking, for example, the sophistication of attacks has increased dramatically, whether it's account takeover type attacks or, let's say, credential stuffing. The use of robotics by fraudsters has increased significantly over the past 12, 18 months. And I think banks need to keep up with that threat and are dedicating resource to doing so. If we look at payments, likewise, the threat from a fraud perspective has grown, both in terms of breadth and sophistication. Banks are moving quickly towards real-time payments, which present a greater level of risk from an execution perspective, and obviously supporting third-party payment processors, money service businesses, the level of innovation in the e-payment space, and considering cryptocurrency, all of which are extremely positive but also carry risk as well, is a critical focus for banks. And then I think digital onboarding, where onboarding an individual or a company as a client is a potential source of risk, certainly where there is synthetic ID fraud or other masking of information or providing false information, where traditional processes may have been able to capture the majority, and digital processes need to keep up and bring new sophisticated tools to the process. Final comment on clients. Certainly the last 18 months since the beginning of 2019 has seen a significant uptick in the risk posed to companies by cyber-enabled fraud. And I think we've seen that in malware and Trojan horses, where customers falling victim to, let's say, phishing attacks and installing those sorts of malware on their devices have then made payments away to fraudsters, as well as more simple business email compromise, social engineering type schemes, which are sometimes supported by a level of digital fraud, such as an attack on a vendor and then a vendor impersonation scam. The FinCEN advisory in July 2019 was clear about the risk in this space, but certainly we see it increasing in sophistication and in number.
Great, thank you. So as you may have noticed upon the introduction, we have two Jeremys on the line. I'm going to refer to Jeremy K and Jeremy S, so I apologize. So Jeremy K, you have extensive experience in building programs, and certainly having the ability to have looked through a regulatory lens on the different options available to protect the financial system, really, from some of these threats that Ben just referred to. I'm curious, what impact do you think COVID has had and will have that's unique post-COVID versus pre-COVID?
Thanks, Holly, and thank you to Refinitiv for having me. As everyone should expect with a lawyer, I have to start with the caveat that these are my views and not necessarily those of my firm. But what I wanted to start with is sort of the esoteric concept of, I think today in the COVID, I can't say we're post-COVID world, is marked by a degradation of the sense of trust between individuals and between individuals and institutions. I think, Holly, you touched on that, on our, not only the social distancing orders that came out that prohibit us from doing shopping or going to restaurants or doing any of our everyday activities. There's a fear in people that in doing some of those activities, they're going to be exposed to something that can really threaten their health and safety. And that fear, I think, degrades the trust in all fabrics of society, including in our financial relationships. And I think that's something that financial institutions are going to have to deal with. We're dealing with it now. Face-to-face transactions are more difficult to achieve. They are, in some cases, prohibited. Cash is suspect because it's essentially something you hand over to someone else who's going to pass it on to someone else who's going to pass it on to someone else. I believe the CDC has said this is not a significant source of transmission, but it's still in the back of people's minds. They wouldn't have said anything about it if people weren't thinking about it. Heck, I've even seen on social media, which is not necessarily the best thing, best source of information, but these little tools you can get so you can enter information into an ATM without actually physically touching it with your hand. So how we're going to be interacting in a financial space is certainly going to change. And I think that has to devolve down into the financial crime compliance program. I think a broad reassessment of risk has to happen, particularly if you're talking about moving to less face-to-face interactions, if you're talking to moving to supporting digital or supporting cashless mechanisms. You need to assess the risk of that. You need to brief your board on that. You need to start talking about what policies and procedures need to be updated. Sort of a bugaboo for everyone is customer identification and how that needs to be updated if you are moving to more of a digitally oriented system. You can't just suddenly start taking digital IDs. You have to, according to the rule, you have to update your policies and procedures and have them approved by the board before you can really move to a new non-documentary system of verification. With all of these changes, I think you need to think about how you interact internally within your financial institution. Certainly, as the FinCEN advisory from, I think it was 2016 referenced, you need to build really deep relationships with your information technology department if you're a compliance department. You need to understand what data is available to them, what data they keep, what's available to you as a financial crime compliance professional, how you can exploit that to detect suspicious activity or to even identify appropriate patterns of conduct. And related to patterns of conduct, as people, as individuals, as humans, their behavior is going to change due to this situation. That means a new normal has to be established. Your transaction monitoring systems need to be retuned to identify the new normal and allow new patterns of activity to develop to sort of highlight red flag activity. You need to train your frontline staff. I think you need to train your frontline staff now. Imagine if under old policies and procedures, if a customer came into a branch wearing a mask. Almost always, that is going to result in some sort of suspicious activity report, if not a call to the police. And yet that is going to become increasingly common. So you need to think about the changes in behavior of your customers, the changes in your relationships with your customers, and update your financial crime controls accordingly. I think something that really needs to be thought about, and Ben, I think you touched on it very briefly, is vendor management and how you are able to exercise oversight over your vendors. You're no longer able to do in-person visits. You need to rely on the vendor to really be doing a good job. And if you're talking about building a partnership with fintechs, I think we all recognize there's a different culture there. There's a different set of resources there. There's a different risk appetite there. And so you really need to be cognizant of that and how that is going to impact your financial crime risk before you get so far in bed with a potential vendor or a potential affiliate that you are now assuming risk that you can't otherwise mitigate.
Great. So I found the comment funny on the, we would traditionally call the police if someone came in with a mask, because we went to the store recently and my husband went in and, had his mask on, and I just happened to turn over and look in the window, and my heart jumped a minute because it looked like it was being held up, but it was just everybody there with masks on. So it was certainly a different environment. So I'm going to go Jeremy S. So this kind of, a few of the comments that Jeremy had just made and brought up, right? The different trends, the different, tuning typologies, et cetera. So can you just talk to us a little bit about what trends you're seeing within, BSA reporting and some of the different typologies as well? I think that lends itself well.
Very glad to. I know this may get a little confusing with Jeremy K and Jeremy S. Bear with us. Jeremy K and I are used to that because I actually filled the role that Jeremy left in an acting capacity. So it's really good to see you again, Jeremy Kuster. And thanks for having me here. So again, my name is Jeremy Saucer. I'm part of the Financial Crime Enforcement Network. I am the acting director for the Office of Strategic Policy. So I'm the director or the manager for what we call the advisory program. I hope that many of you are familiar with it because right now with COVID-19, we are really actively moving to try to disseminate as much information as we possibly can. The positive with COVID-19 is that it's really increased some collaboration between law enforcement as well as financial institutions and other FIUs around the world, financial intelligence units like FinCEN. So first and foremost, FinCEN's mission is to protect our financial system from illicit use. So to combat money laundering and the terrorist financing and other illicit activity, and promoting the national security, we are analyzing information that comes into us, and we've assigned a lot of additional resources during the COVID-19 pandemic to making sure that we are prioritizing the way money laundering and criminal activity is evolving. Since February, we've had over 13,000 filings already, which is really incredible since there's typically a lag in BSA reporting, but 13,000 filings with just COVID-19 is really incredible. So some of the efforts that we've already alerted financial institutions to as early as March 16th are imposter fraud, investment fraud, fraudulent products, particularly in the medical arena, insider trading, and then we also reminded financial institutions of our natural disaster-related fraud advisory. Oftentimes during the times of a natural disaster, and I'll remind everybody that the president declared COVID-19 a national emergency on March 13th, we see a rise in benefits fraud, charities fraud, and cyber-related frauds. So not surprisingly, as time went on from when we issued that notice on March 16th, we are indeed seeing a trend in those areas, as Ben and Jeremy Kay also stated. So we have issued several notices, 3 actually, since March, one on April 3rd and another on May 18th. The May 18th advisory is really to guide financial institutions in how to report, best report SARs to us so that we can best analyze those and refer those suspicious activity reports to law enforcement. But also on May 18th, we issued our first advisory that included contextual information and red flags on some of the trends that we were seeing. And that advisory really hit on medical-related fraud. So I think the name of the game right now is certainly fraud. But interesting, when we first were analyzing fraud, we noticed that there was a trend towards already existing fraud with an interesting COVID-19 twist on it. So we're still seeing fraud evolve. At first, we focused, as well as law enforcement, on medical-related fraud, and you're going to see, as I named the trends, how the trend is starting to move and shift, but still very relevant with the different types of fraud. So with medical fraud, breaking down the typologies, we've seen everything from claims related to false vaccines to disinfectants that would rid your home of COVID-19 and unauthorized COVID-19 at-home tests. We also warned financial institutions because we were seeing a lot of non-delivery scams. So the COVID-19 pandemic really disrupted global shipping and created a substantial demand in certain products, particularly those medical products. And when we saw that, fraudsters began to advertise products that they may never have had, or certainly had no intention of actually distributing. So they would collect large deposits with no intention to actually delivering the actual product that they were advertising. We also saw price gouging and inserted information and red flags about certain price gouging in the first advisory. Now we're really focusing, along with law enforcement, on a large trend in dealing with money mules. So we're seeing activity related to money mule activity, and I'll just remind you that money mules could be unwitting, witting, or even complicit. So there's a spectrum of money mules that could be involved. And some of the typologies that we're seeing in money mule activity includes fraudulent employer scams. So a company is stating that advertising at-home type of positions, and what happens is the individual then attempts to, especially those with who are unemployed, take these at-home employment scams, and unfortunately, what they're just asked to do is move money between certain accounts, or actually even asked to create accounts in the name of businesses, et cetera. So they could become money mules with the thought that they were actually doing some sort of at-home employment. It's also the same for certain charity scams that we see as well. Other money mule scams that we're seeing on the rise are romance, or sometimes called the Good Samaritan scams, where individuals are duped. They seem to form a trusting relationship with the scammer. The Good Samaritan scams are those scams where an individual recruiter will say that they are a U.S. service member overseas, or they're a U.S. citizen that was a traveler that's caught abroad. So they ask these Good Samaritans to move money. So we're certainly seeing a rise in that. And then we also are seeing a rise in fraud related to unemployment insurance. I hope that many of you saw in the news the unfortunate targeting of the state of Washington's unemployment insurance program, where there was a lot of stolen identifications used. It seems that many of those criminals may have been abroad, and they were targeting the state of Washington's unemployment insurance program by having funds deposited into an account and then quickly moving that money overseas. Some of the other scams that we're seeing includes certain, as we had already indicated, imposter scams. So individuals that are claiming to be from the WHO or the CDC, et cetera, or even imitating certain U.S. government agencies like the IRS, and being able to con individuals that are targeted in those scams. And then, of course, most relevant. So again, as we see the trends moving, I think most relevant to this audience is a significant rise in cybercrime. So FinCEN and our law enforcement partners, we've seen thousands of reports of cybercrime exploiting the COVID-19 opportunity. So many of us moving to telework, of course, that creates a new opportunities for these type of cyber criminals that are targeting vulnerable remote applications and functions, for instance, including virtual password networks, remote desktop protocols, and exploiting these systems and stealing sensitive information. We've certainly seen a rise in BEC fraud. I think one of the greatest typologies that we have seen are individuals that know that large payments are going to be made for medical supplies. So they target the healthcare sector, knowing that there's a large payload involved as well. And one of the schemes is stating, hey, we need to change the financial institution involved here to a financial institution that is not as impacted by COVID-19. And then, as my former presenters stated, really having COVID-19 as a lure as well. So sending malicious links and malware that individuals use, and this lure is the individuals looking for legitimate information, and they click on these links, and unfortunately, they're downloading a malicious payload. And lastly, the typology that I'll hit is about unemployment fraud. So this is a major focus for law enforcement at the moment. We're seeing a couple of typologies involved here, where fictitious employer schemes, where they're claiming fraudulent companies or making up fake companies, and the individuals trying to claim unemployment benefits. We have identity-related fraud, like I had mentioned, with the state of Washington. And then we have employer-employee collusion schemes. So the employer pays a lower wage to the employees, but agrees that the employees can take unemployment insurance as well. And the lower wage then is unreported. So there's a scheme going on there. And then, of course, the standard misrepresentation of income fraud. This can go both ways. It could be the individual who goes back to work and is receiving a wage but never reports that they're back to work, or in the application status, they attempt to state that they have a higher salary or higher wages than they actually had earned previously so that they could increase their unemployment insurance benefits. So that's just some of the typologies. I'm trying to hit on what I believe are the law enforcement main priorities and what is the greatest trend that we're seeing in BSA data reporting. Thanks so much.
Great, thank you, Jeremy. So quite a few different typologies, just kind of walking through, but it was interesting, right? If we think about some of those typologies, Jeremy, to your point, some, existing that we've seen, but then now we see a bit of a COVID twist to it, especially now that, there's not that in-person interaction that's happening. So I guess that leads to the perfect segue into the next, piece of the discussion, which is really around, what type of technologies can support us in that and also to help, right, in catching some of that. So James, you've been in a really unique position with Refinitiv. You've been able to have an opportunity to really investigate and review a lot of the different technologies out there that's supporting, the clients that we work with in those digital journeys. So just given what Ben and Jeremy highlighted, about some of the typologies and what they're seeing in the trends, what technology do you think that you see in market that's proven to be most useful, and then and resilient, and then alternatively, some of the problematic technologies that you're seeing as well?
Sure. I think I feel like I need to provide some hope, given what we've heard for the last few minutes about some of the things that have been happening.
We'll get there, I promise.
Yeah, I think it's very clear that even going into the pandemic, there was clearly a shift towards digital for traditional financial services players. I think even before governments moved into kind of social distancing and lockdowns, there was some data that said that over 80% of customers were concerned about going to their banks, even before they were told to stay at home, and over 60% of them were keen to try using digital apps. I think if you combine that with some of the stats around identity fraud, person-to-person payment fraud from last year. So I think identity fraud grew about 13% last year, and it was nearly $17 billion. Person-to-person fraud grew over 700% from 2016 to 2019. And account takeovers, I think, were up about 70% last year. So, you've got that context combined with some of the examples that both of the Jeremys gave. And I think we came into this with some challenges anyway. I think the good news is that even though a lot's changed, a lot hasn't. So where people have deployed strong systems for screening, adverse media, their AML controls, those are still valid, and, they're still very, very valuable. I think those organizations, though, that had started to deploy stronger digital onboarding programs, combining digital identity capabilities with things like biometrics, bringing together that upfront IDV and KYC process with linking that to authentication. Those organizations are probably feeling a lot better now than some of the others that hadn't started to move in that direction. And, with these kind of technologies, you don't need to be the first to move into them, but you certainly don't want to be the last, because I think what we're seeing is the fraudsters and criminals are really looking for vulnerabilities, and they're able to exploit those at scale. So I think, the technologies that are working well, where people have put in strong IDV processes, document verification processes, linking those with anti-impersonation, anti-fraud technologies, those are very, very valuable. And certainly with some of the examples that Jeremy S. just went through, those can clearly help if they're well implemented and well deployed. On the flip side, the problems, and I probably don't need to spend too much time on those because we've had lots of examples of them today. But, if I just take you through a scenario, given that we had, I think, over 1,000 people registered for this court, it's clear there's lots of problems and there's lots of challenges and people are looking for solutions. I think Jeremy just talked about, how the world's changed and how everything's moved very quickly. And I think when you start thinking about transaction monitoring and surveillance systems, patterns that you've expected of your consumers. I mean, play out a scenario. You're a fraudster. You buy data on the dark web. You go and compromise accounts, and you've been quite successful. You've had some successful phishing scams. you're struggling to figure out what your next crime's going to be. And then all of a sudden the world goes into lockdown. You've got hundreds of millions of people now working from home. They're largely on unsecure networks. They're accessing work systems and banks' accounts and mobile devices from IP addresses they've not used before. And combine that with the fact you've got a lot of people that are desperately trying to sign up for benefits, access to credit, new accounts, loans. They're signing up for, government disbursements. It's a really, really big opportunity for the fraudsters. So, it's incredibly challenging. I think the technologies which have been proven, prior to going into the pandemic are as valuable now as ever. But, institutions need to move quite quickly to deploy those. And as I say, I think you don't have to be the first, but in this environment, you certainly don't want to be the last to roll those out.
Great, thanks, James. So Jeremy S., I kind of want to come back to you a little bit on this, just because you were able, talk through some of the different typologies and some of the things that you're seeing. So just curious, James highlighted some of the different technologies, rightfully so, that was in place previously that still holds strong. And then, some of the newer technologies that, is being adopted, should be adopted, really from that kind of digital onboarding perspective. But are there any key trends that you're seeing really in the enforcement side that maybe institutions need to make sure that they're considering when they're evaluating some of the different digital technologies?
So I have to apologize if you saw my look like this. Unfortunately, my computer froze, so I missed a portion of the question, but I caught the ending, and I believe that you were also asking about enforcement, and now it seems that you're frozen. So I hope you all can hear me. Can one of my other presenters give a thumbs up if you can hear me? So I'm going to continue, but it looks like everybody is frozen for me. So hopefully you all can hear me. I won't be able to speak towards any ongoing enforcement investigations, but I can certainly tell you that at FinCEN, at least personally for me, I find this to be a very exciting time for the possibility of innovation, particularly in innovation related to authentication of digital identity. To that end, I want to strongly encourage any fintech, regtech companies to apply for our Innovation Hours program. The Innovation Hours program is still moving forward. We are still meeting once every month. So I encourage you to apply for one of those abilities to present to FinCEN if you have an innovative product. We also had encouraged innovation in one of our notices. Again, it's just a very strong statement. I believe it was the April 3rd notice where we encouraged that. But for enforcement challenges, and your question towards enforcement, maybe it's best if we talk about some of the compliance challenges. So we had first issued our notice on March 16th, sharing the concern that financial institutions had about some of the challenges, particularly related to filing deadlines with us. So we encouraged financial institutions to reach out to us at FinCEN, as well as to their other federal regulators, to inform us if there were any issues that were ongoing or that a financial institution had. In fact, FinCEN actually created a new drop-down menu for financial institutions to contact us with any concerns, and we began to then use that to be able to prioritize certain questions that we were receiving. And I think some of the biggest questions that we received, or the highest number of questions, with over 300 questions coming into us in a short period of time, had to do with PPP loans and whether or not with those Paycheck Protection Program loans, whether or not financial institutions needed to collect beneficial ownership information to be able to make those loans. So with that challenge, one, meeting deadlines as everybody was moving to a telework environment, and two, ongoing financial services, particularly in the form of issuing PPP loans Paycheck Protection Program loans, which Congress and the president had approved, which really were important for our economy. You could then begin to imagine what some of the financial institutions needed to do to be able to collect enough information to be able to make those loans pursuant to their AML program. So I'm just scrolling through some of my notes here to see if there's any other compliance challenges that I'd like to flag for you. And why don't I turn it over to somebody else? And if I do see or think of additional information, I'll be glad to share that information as well.
Sure. So I'm going to throw this out. It's a little bit of an open-ended question, but I think James touched on it, a bit of it about biometrics, et cetera. So there's been an ongoing dialogue, I would say, is the, just digital identity, right? Is the driver's license or passport, et cetera, really going away now? But do you think that this might be the tipping point for providing new approaches to identity, right? Where password pins really, probably all compromised at some point in time. But do you think this really starts to open it up and give us the, give us the springboard to look at facial recognition, those type of things?
I might lead off with that.
Go ahead, Jeremy, after you.
I just wanted to say, as someone who's been the subject of multiple OPM leaks about my personal identity, I hope to God we can go to something more secure. I do think the time is right, but I do worry that the environment is not built yet. And I think part of it is the regulatory structure that we have in the United States. I think the CIP rule itself is very limiting. Certainly, there is some flexibility in how you verify identity, but on a practical level, that flexibility is very limited in terms of how examiners view what is an appropriate non-documentary way of verifying identity. Moreover, I think the pieces of information that are required to be collected under the CIP regulation are a little bit outdated. What I'd like to see us do is instead go to almost a NIST standard for, and NIST is the National Institutes of Standards and Technology, that approach to setting standards for what type of information should be collected to verify identity, rather than prescriptive, you must collect these particular pieces of identity. I'd like to see a lot more flexibility, and I think that might help open up a greater opportunity for industry to adopt and become part of a digital identity ecosystem. I'd also like to just sort of put out a radical thought that if we do that, we really need to get away from the legal identity authenticators. That's essentially the passport office and the DMV. Those are all in-person, highly secure ways of validating and authenticating identity, but they're not the only ways anymore. And the more competition we get in this space, I think the better product we'll get in the end.
Yeah, I agree completely, Jeremy. I think it does, Holly, feel like a tipping point in terms of obtaining identity documents and verifying, and how banks support authentication during a transaction, as well as establishing credentials at onboarding and renewing them during the periodic review process. And I think people claim to spot tipping points when there aren't necessarily tipping points, but I certainly think that that we are in the midst of a tipping point here. And there are some amazing solutions available. I agree it feels early, particularly around digital onboarding, which I think is the big focus, where some of the standard tools, having a wet signature on a form, being able to do a site visit, having a face-to-face meeting are less easy now. And I think biometrics is certainly part of the future, as is e-signature, together with obtaining data through public-private partnerships, through fintechs to support ID&V and KYC services. And I think also the concept of how you authenticate, verify that the individual that you're dealing with is actually the individual they claim to be, is changing pretty radically, and it feels like the ability to do more over the required regulatory minimum standards is significant now. Again, early days, but monitoring the device that they're using and validating its integrity. Obviously, the concept of checking an IP address is not new, but there's a lot more you can do on device integrity. Likewise, the interaction journey with the device. It's much easier to tell now whether you're dealing with a robot or somebody under duress or a fraudster by measuring how they interact with a keyboard and a mouse, or how quickly they fill in the field on a smartphone. So there's some really exciting stuff that's available right now. And like my fellow panelists, I'd encourage institutions to really start to take advantage of it and build it into future plans. Certainly around the transaction journey, but definitely when it comes to digital onboarding.
I'm excited. I think we're all on the same page. I feel like we've been having a bit of this conversation on the different options out there for a really long time. So I do think that this allows us to springboard that a little bit in an accelerated manner. So I'm with my panelists. I'm looking forward to that journey. So I do want to move on because I think this is, very important. Especially just given the conversation that we've had, right, where we've talked about, certainly the risks that we're all facing from a fraud perspective, the different typologies, the typologies that were pre-COVID that now have a COVID twist, the opportunities that we have, right, with technology, being able to bring that in to also help us get through some of that, and things to look for the future. But when the panelists and I were talking through, these different areas of focus, one of the things that we were discussing was we want to ensure that we spend a little bit of time on, an item that we felt very passionate about was the impact that this has started to have on vulnerable groups within our communities as well, right? So as we, we're rightfully talking about how we can watch for the increased frauds and trends, from an institution perspective, software to help us protect. We just want to make sure that we don't forget about, how criminals, they're also moving to digital means, how they can really have an impact on, some of the more vulnerable communities very significantly now as well, just given their access to some of those digital solutions. So one thing, Europol's executive director, I'm just going to quote her here quickly, is she said serious and organized crime is exploiting, the changing circumstances during the pandemic. I think we've just all talked a little bit about that. But then she also states, the full impact of the pandemic, not only on crime, but also more widely on our society, has not yet been apparent. And I think that that's one of the topics that we really wanted to touch on, because I agree, right? I think that we haven't seen the overall effects. And I think it also has raised awareness on some of the effects that we probably didn't realize. So Jeremy K., if I can, if I think about the economic impact that this has had on many families across the board, and the push that, we were just talking about moving to digital banking, I can see where this might create some disparate impact and create some opportunity from a greater financial crime compliance perspective. So can you just talk to us a little bit from your perspective on what you're seeing and some of the impact that you think that we just need to be mindful of?
Thanks. This is a very important topic for me, and I really appreciate the opportunity to comment on it. I'm not seeing a lot immediately, but I think the potential is there for the unfortunate integration of unintended bias in financial crime control systems, particularly as they become more digitally oriented. I think there becomes a have and haves not situation in that regard. As you become more digitally oriented, you have more information about your customer in a lot of different ways. And all of that data is exciting and really can really help your anti-financial crime program. And I encourage you to exploit it to the extent that you can. But also recognize that people who are not adopters of the digital system may not have that same data about them, and therefore your financial crime control systems, which are now digitally oriented, may find that customers of traditional banking are overrepresented in red flags or suspicious activity reports. So it's just something that you really need to be careful of, and think about as you're adopting your systems, think about as you're reviewing your controls and how your technology is being leveraged. I think we all want to assume that technology is neutral. Unfortunately, I just don't think it is. It is still susceptible to integrating bias as pretty much any other human system, and it's something that everyone needs to be aware of.
Great, thank you. I think that goes directly back to some of the comments that were made earlier that when we went into COVID, everybody needing access to certain things digitally, all of a sudden onboarding accounts that you just never had a profile for, certainly has caused some unique challenges. I know, a couple of examples directly that I've been involved in. We love a little small town in island in Belize where, not a lot of individuals have access to internet. It's not that great there. And then when the COVID situation arose, they didn't have access to funds, period, because all the banks were closed down, no access. So you certainly get to see it live in those scenarios, but it's not something that I would have thought about, honestly, on a regular basis, on how it hits different communities. So I think we may have lost Ben.
I'm on the
but I wanted to
hear me, Holly.
All right. I can hear you. So Ben, I just wanted to quickly, just as a practitioner, what are you seeing, in the way of compliance digital space and some of the best practices maybe that you're working through internally, just to make sure that you and the team keep that in mind, as that there's a group that will not necessarily have the history of others maybe that are starting to open up accounts.
Yeah, sure. I think stating the obvious, it's getting the basics right from a first line of defense business and a second line of defense risk steward perspective. And I think building on that, I think having the right level of expertise around fraud within a financial crime program, around IT, data, cyber is all critical. And I think, paying market or above market for that expertise, also critical. Hopefully my boss is listening to this webinar. I think then acting on cases. So I think there's a tendency for corporate cases, less retail cases, to wait for a trend, where I think actually acting on a single case is key. Likewise, looking forward, using information from a case or a trend perspective and analyzing potential risks and threats, and just being very open to innovation. I think embracing partners rather than building tools solely yourself, and learning. I think Jeremy S. mentioned the Paytech Protection Program. I think some amazing sessions by the FBI, by Homeland Security, by other parts of law enforcement and the regulatory community around potential risks and threats. And I think, banks need to be open to all of that intelligence and act on it, including, in budgeting and ensuring that there is the right level of focus from a budget, build, partner, innovate perspective. I think finally also making sure that there's a focus on advising clients, companies and individuals around ever-present threats from a fraud perspective, both, some of the standard information around how to deal with their partners and how to make sure there's a level of understanding as to the need to be sure that you're dealing with what sounds like your CEO or CFO and could be a fraudster, or who you think is your genuine vendor but maybe an imposter. Together with more, future-looking advice around the potential for threats like deep fake and voice information. So I think those would be some of the main themes I'd share.
All right, great. So as we fully anticipated with a packed agenda, we weren't going to get to each one of the bullets that we wanted to cover today, but I do want to at least get to a couple of questions. We've actually quite a few that have come through, and just for everyone on the in the audience, we are going to be able to follow up directly with you on questions that we can't answer today. There are quite a bit, so I know we're not going to get through all of them, but I do want to at least spend a little bit of time in our last 5 minutes just going through a few of the questions that have been asked. So one of the first questions, and I believe, Jeremy, this was in relation to some of the typologies maybe that you mentioned. Does the relationship scam that was one of the most popular fraud types during pre-COVID, have you also seen that increase or decrease with COVID?
So thanks for that question. Relationship or romance scams are something that we're looking into. I want to just mention another vulnerable class of people are the elderly. So we're also looking into the different frauds that may target the elderly and putting together red flags for it. That includes the romance schemes. So it's difficult to say if we're actually seeing a rise in that particular fraud. I can certainly tell you with COVID-19, it's continuing. But it's difficult to say if we're seeing a rise because are we just seeing a rise in increased reporting or is there just a new focus on fraud, et cetera? So I can't tell you whether or not it's rising, but I can tell you that we are actively gathering more red flags, financial indicators to inform people.
All right, great. So next question, and this I think is coming more as a best practice thought, is while developing some of the new technologies within the business for to avoid financial crime, what's the feeling also on educating your customers on the current different scenarios that trends that are being seen and Ponzi schemes? So it looks like it's really geared around what are your thoughts around also educating some of the customers around some of the trends that you're seeing?
Yeah, I think I touched on that just in the previous response, but high priority, both in terms of it being the right thing to do, helping clients protect themselves, together with the fast pace of this space where new threats, new typologies, new fraud organizations are emerging on a regular basis. We held a webinar and invited all of our commercial banking client base to participate, hosted by the CEO, on these types of threats, and spent an hour going through various typologies, risks, and means of dealing with them. And I also think as cyber threats become more sophisticated, all of us are going to be spending more time on cyber and the cyber risk moving forward. So fully agree, it's high priority to make sure that banks are helping their clients understand the risks and helping them protect themselves.
Great. So I think we're running close to time, but
Jeremy
yeah,
Saucer,
go ahead,
just
Jeremy.
really quickly, I just want to say a positive because of that question. Well, not because of that question, but with that question, I will state that we have at FinCEN been actively reaching out to the Consumer Financial Protection Bureau as well as the Federal Trade Commission, and we've actually been citing to some of their products that they're more geared towards customers as opposed to us with the financial institutions. Thanks so much.
Great. So I think we're right at time. As I mentioned, we will make sure that we grab the questions. There were quite a few really great questions, so thank you for submitting those. We will get those answered post-webinars, but I do want to, very much say thank you to the panelists today. Greatly appreciate it. Certainly honored to be the moderator with this group of folks on our panel, so thank you.
Thank you for moderating, Holly.
Hi, everyone. And yes, again, thank you to our panelists. We also want to thank you, audience, for joining us today. Before we wrap it up, I just wanted to mention we value your input. So please, if you can take a moment to answer the short survey that appears on your screen. It's only 2 or 3, 4 questions. And then also, as I mentioned at the top of the broadcast, we will be sending out attendance certificates for the CAMS credits to those people that met the qualifications. Those will be going out via email to you at a later date. And in addition, everyone who has attended the webinar today will receive some follow-up information, a link to the recording, the slides, and some additional resources that you can look through. So be on the lookout for that to come through in the next few days. So with that, again, thank you. Everybody, please stay safe. And this event is now concluded. Have a wonderful day.